Okay, here's a global macro rundown on oil, as well as a position update. Big picture, when we look at the monthly chart, we're still in a long-term downtrend. You can see the bands have all rolled over. This 30-day, or excuse me, 30-month moving average is descending, all indicative of a bear market. There is quite a bit of room for this cycle to come lower. Maybe that plays out, maybe it doesn't, but it is down. So you could see easily another 2, 3 months, another quarter, or at least through the summer, bearish cycle down. Price really isn't, it was oversold here at the beginning of 2015, the end of 2015, beginning of last year. These were areas where the market was pretty definitely oversold, due for a bounce. We're not in that territory now. You're just hanging out here, not overbought, not oversold. When we go to the weekly level, we can see we've gone over this a couple times in the room, and you did start to break these long-term trend lines. I'm not huge on the trend line. I care more about actual highs and lows relative to each other. All right, and or that's basically how we make up the trend, and the time piece, the cycle piece. So this is still moving lower, and I don't disagree. I think that long term, you want to be a bear on oil. I'm still bearish. The monthly and weekly chart, both bearish. However, when we go to the daily chart, this is where I think you're due for a bounce for a couple reasons. All right, hopefully you can see this right. All right, so for a few reasons here, this dash blue line here, this is our pi line. All right, very simple concept, but it works extremely well. I don't really want to get into why in this video. A couple things here. So we took out these higher lows. You failed to hold the bands, all bearish. There's a couple swing lines in here also I want to draw attention to. But I played a short from here into these lows, and I also we also reshorted up here, went course short and covered into this bottoming tail, this candle. Okay, that was, I mean, we were covering on the way down, but this is where I got flat out of our short. And now I just went core long, and here we can see price is oversold. You don't really need an RSI to know that. When you fall from here to here, you're pretty oversold. I will say that price, when it's above this line, that's indicative of a bull market. And so this is an area. I mean, oftentimes we'll hold it pretty precisely, but really this is an area. It's like the ropes in a boxing ring. You can lean up against them, right? So there is a good chance we held here. This pretty strong bottoming tail. I do also like this cycle for swing trades, for this cycle to keep coming up. So maybe we're wrong, maybe we're not, but the risk is clearly below this low, today's low, and even you could play a pretty wide stop if you wanted on a core position, as long as we're above this low. It kind of depends on how you play it and how you manage your risk, how heavy you want to get. I'll show you real quick, guys. Here's the swing line. I did a video on it. We talked about it extensively this morning. But this is a very simple concept. You follow these highs. Each high failed to take out the prior day's high in this down move. You did take it out right here, right? That was a nice swing line. I call that a swing line. It tends to represent a nice intermediate term move, which can be, 2 to 5 to 8 days, 13 days. That's all the swing time frame. And here on the way up, okay, we take out these highs here. We start following these lows. That was a nice swing line. And then essentially that's just showing you the hourly and 4-hour higher lows or the trend. or what we call our TMS. All right, and then this is your bearish setup right here. Took out that low, and then at this point, what we want to do is follow our lower highs down. And today, once again, you can see that we took that high out from yesterday. The swing line is taken out. So I think there's decent amount of time to cycle up here. I do think there's a couple pivots on the way up, or areas that we'll be looking to, for price to potentially move into. But this is a good target zone up here for where the market can rally. You get above the 8, there's definitely room to test the underside of 50. All right, we don't use, I talked about this yesterday, we don't use target trading. The problem with target trading is you're going to leave out the whole concept of how price gets to a certain area. How it arrives there matters. The way it gets there matters. If you have a market that just goes vertical, it's crazy not to take profit, right? And trading with just targets, you ignore that. You ignore that aspect of price movement. You also ignore the fact of the timepiece, which is even more critical. So I want to take profits on an hourly and 4-hour chart if and when we get extended, and or another way to say that is overbought, and or you have certain cycles start to peak out. It's another reason why we want to take profit. Or if you break a pivot, we have lots of other setups, topping tails, etc., why we might want to take profit. So we don't target trade. But this isn't natural area for the market to retrace to. I don't just set my target and hope it gets there. If I get overbought on the hourly and we come up just shy of my target, that's just crazy to not execute when you're very close to your original target in that scenario. So we don't target trade, but we will analyze where a market can rally to. So when I look at this move down, lots of movement down, about halfway, we could definitely rally back towards, again, the underside of 50, plus the 30 days there at the top of the bands. So that's my call on oil. How you structure that, you could be long call ratio back spreads, long a few futures. You could buy 50 strike calls or 49 strike calls, sell the 44s. Different ways to play it or express your bullishness. But yeah, that's what I think about that. And maybe I'll have a couple other updates on some other markets for you guys.